In this lesson, we are going to demonstrate how to book a capital lease versus an operating lease. First, let's focus on the capital lease. We have leased 2 hard drive destruction machines from DriveThru. So we need to get those on the balance sheet actually as a fixed asset because capital leases are booked very similar to a purchase of equipment. Let's add the 2 fixed asset accounts that will track the value of our 2 hard drive destruction machines. So the first thing I'm going to do is click New on the chart of accounts, and we are going to choose fixed asset, and the detailed type is tools and equipment, and I'm going to name this one hard drive destruction number 1, and helps if you spell it right, but that's what this is for. Okay, and you know what, I'm going to copy that because I'm going to do another fixed asset account to represent the next one. So save and new, let's do another one. In this case, this is the new screen. I've actually not saved this, and I'm going to just paste that in and change the number and save and close. So let's get back out to the chart of accounts and look for our fixed assets area. And here are my 2 hard drive destruction fixed assets. I like to look at the chart of accounts the way the client has it set up now and see if I would change anything. And you can see here the truck has actually different structure here. They have a truck and then the sub accounts. So what I want to do is put shredders as my parent account and put these 2 hard drive destruction machines underneath that. So let me go ahead and add a new fixed asset account to work as that parent account. And what that does is help total all of these all this shredding equipment together. And I'm going to save that. I'll go back and edit my 2 pieces of equipment. And I'm going to make this a sub of shredders. Started typing it, brought it up. And let's go fix the second one. Edit this one. Sub account of shredders. So now I'm tracking those together. What's nice about this is on the balance sheet, I'll be able to get a total for both shredders and their value. So it's kind of allowing me to have subtotals on that balance sheet. Okay, so that's the value of it. But when you do a capital lease, you actually have to offset the lease itself to a liability account. So what I'm going to do is set up a shredder capital lease liability. So I'm going to go back up to the top. And in this case, it is a long-term liability, and we'll leave that as notes payable, and I'll do shredder capital lease liability. And I will save and close that. And now I have a liability account to offset the value of the leases too. Next step is to journal entry the value of these 2 machines that we are leasing. And I am going to go ahead and do a journal entry to represent that right here. So each one, according to the contract, has a value of $11,250. So I'm going to type in HD and bring in my very first shredder, debit that for 11250. For hard drive shredder. Okay, and then the next one, I could type it in or scroll down. I prefer just typing it in, and the same value, same lease value, and that is my debit column. The credit would go to my shredder capital lease liability account. So again, debits equal credits. I can't save it unless they do. Let me save and close that for you. We'll go back to our chart of accounts, take a look at the value of our shredders. 2 shredders, each individually $11,250. Total value of both shredders we are leasing is $22,500. If I scroll down a little bit to my long-term liabilities, here's my shredder liability. And as we make payments on this lease, this liability will start reducing out. Okay, so that is a capital lease. Again, it is more like purchasing in a way. It's booked almost identically the same. With an operating lease, it's completely different. We don't even have to worry about the balance sheet at all, except for the fact that we are maybe cash is leaving the bank and it's going to lease expense. This one's really simple. I'm just going to go ahead and do a journal entry. I already have a bank account and I already have lease expense. So let's go do that journal entry. Let's say our first payment on the next lease is coming out of the checking account. And this lease is actually for a baler that will bale paper. And the lease is for $115,000 and it's going to go over 12 months. So basically what we're going to do is divide the 115 by 12. It could be on the contract that there might be some interest involved in there. So make sure you do look at the contract and see if there's any interest expense as well. So let's go ahead and we're going to credit the checking account. What I'm going to do is use a formula right here in QuickBooks Online, 115,000, and I'm hitting the backslash for divide, divided by 12. So that is what I'm assuming right now is the monthly lease. This would be without interest. If there's interest involved, obviously this payment is going to be a little bit more. We're going to credit the checking account and then debit lease equipment, rent or lease. So this is an expense account, as you can see on the profit and loss statement. And we're just going to write that off. Double check that there's no interest involved. If this payment is for more than that, then it probably is. And you want to maybe do a second row here for the interest expense as well. That is basically how to do an operational lease. You don't have to set anything up really, just lease expense and have the money come out of the bank account.